Hello and welcome to AI Market News by LM. Before we get started, just a quick disclaimer. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Okay, with that out of the way, let's dive in. Today, we're looking at a real head-scratcher in the global markets. It seems we're caught between two massive opposing forces. On one side, we have this incredible optimism pushing stocks to the moon. And on the other, well, we have political chaos in Washington threatening to pull everything right back down to earth. It's a classic tale of greed versus fear, and we're going to break down what it all means.
So, here it is, the billion-dollar question. The US government is shut down. Key services are on hold, federal employees are at home, and yet, if we look at the stock market, it's like a party is going on. So what's happening? How is this even possible? What on earth are investors seeing that makes them just shrug off this kind of turmoil?
And look, the numbers really tell the tale here. We're not just talking about a small bump. The S&P 500 and the NASDAQ are knocking on the door of all-time highs. And over in Europe, the Stoxx 600 just set a brand new record. This is a worldwide wave of buying, happening right in the middle of a political mess. It really makes you wonder, what single idea could be so powerful that it makes investors completely ignore a government shutdown?
Well, the answer, it seems, can be summed up in just two letters: AI. Artificial intelligence has gone from a tech buzzword to the single biggest engine of greed driving this market. And right now it feels unstoppable. If you want to get a sense of just how wild this AI frenzy is, just look at this number. $500 billion. That is the staggering new valuation for OpenAI, the company that gave us ChatGPT. It just leapfrogged SpaceX to become the most valuable private startup on the entire planet. This isn't just some big number on a screen. It's a massive signal that has sent a jolt of pure adrenaline through the entire tech world.
You know, this quote from an analyst at Vantage Markets just nails the feeling perfectly. She says it's as if gravity doesn't exist. And that's really the heart of it, isn't it? The magnetic pull of AI is so strong right now that the normal rules of finance, the usual worries like a government shutdown, they just don't seem to matter.
And let's be clear, this isn't just hype. It's all being fueled by real-world massive deals. OpenAI is linking up with chip giants Samsung and SK Hynix. Intel is talking about making chips for its rival AMD. And the knock-on effect of all this? Global semiconductor stocks have packed on more than $200 billion in value. It's a textbook case of FOMO, the fear of missing out. Right now, the fear of being left on the sidelines of the AI boom is way stronger than any fear of a potential bubble.
But that's only half the story. On the complete other side of this tug of war, while Wall Street is chasing the AI dream, Washington is building a very real and very high wall of fear. The government shutdown is that second major force, and it's pulling the markets in the exact opposite direction.
For the markets, the biggest problem here is a total data blackout. Sure, essential services like air traffic control are still running, but the government agencies that give us our most important economic numbers? They've gone dark. That means the official jobs report, which is one of the absolute cornerstones for understanding the economy, is delayed. It means investors, and crucially the Federal Reserve, are basically flying blind.
And we can't forget the very real human and economic cost of this. We're talking about 750,000. That's the rough number of federal workers who are now on temporary unpaid leave. That's 750,000 paychecks that aren't getting cashed, which has a direct chilling effect on spending across the entire economy. Chicago Fed President Austin Goolsbee had a great way of putting it. He said, "The data dogs are howling." He's talking about the Federal Reserve. They absolutely depend on this steady flow of information to make their critical decisions on interest rates. And without that key jobs data, their job becomes incredibly difficult. And that just injects a whole new layer of uncertainty into everything.
So you have these two giant narratives just clashing with each other. The sheer greed of the AI boom versus the genuine fear from the shutdown. And who's caught right in the crossfire? The world's central banks. This whole situation is pushing them onto completely different paths.
Okay, so let's unpack this because this is the key to understanding what's going on in the currency markets right now.
In the US, the little data we do have suggests the labor market might be getting weaker, so traders are betting the Fed will have no choice but to cut interest rates. Meanwhile, in Japan, it's the polar opposite. Their big business sentiment survey, called the Tankan, just came in super strong. That's got people thinking the Bank of Japan could actually hike rates. So we have two of the world's most important economies heading in completely opposite directions.
And this isn't just wishful thinking. The market is putting its money where its mouth is. As we can see from the CME's FedWatch tool, traders are pricing in a very, very high probability of at least one more Fed rate cut before the end of the year. That expectation is a massive force that's moving markets right now.
So what's the real-world result of all this? We can see it playing out perfectly in the currency pair of the US dollar versus the Japanese yen. With markets betting on Fed cuts, the dollar is under pressure. With markets speculating about a Bank of Japan hike, the yen is getting stronger. That divergence is the engine driving this pair right now.
So that brings us to today, with the markets stuck in this incredible tug of war. What happens next? Well, let's take a look at the key events coming up that could finally tip the scales one way or the other.
All right, based on what we're seeing from investing.com, the next 24 hours are absolutely packed. Later today, we're getting a report on private sector job cuts, which is our best substitute for official data right now. We'll also be hanging on every word from a couple of Fed speakers to see how they're dealing with this data blackout. Then overnight, the head of the Bank of Japan is speaking, and that could give us major clues about a potential rate hike. And of course, hanging over everything is that delayed US jobs report. That's the big one everyone is truly waiting for.
So we come back to that central question. On one side, we have this incredible, gravity-defying AI rally. On the other, the messy, complicated reality of Washington's turmoil. Something's gotta give, right? Will the engine of greed keep pushing stocks higher, or will the wall of fear finally bring this rally to a halt? That is the story we are all going to be watching. Thanks for watching. Don't forget to like and subscribe.